Tony and Thomas, thank you so much. We'll be checking right back in with our carrier in a little bit. We've got more coming up.
That's right. Right now, we're going to talk to the man, the myth, the legend himself, Mike Baudendistal, who's going to jump into a topic we briefly touched on this morning. Mike, how are you?
Doing well. Good to see you guys.
As our head of Intermodal Solutions, it was only fair that we bring you also in to talk about Kansas City Southern.
Yeah, it was a good article with Noy and a good interview you just had with Noy. So I'll try to not be redundant. I'll try to yes and it. A couple of reasons why Laredo is such a big deal. It's the largest border crossing in North America. It handles about 44% of the cross-border trade between U.S. and Mexico. So it's also busier than any of the cross-border points between U.S. and Canada. Kansas City Southern does all their border crossing there at Laredo. Union Pacific, and sort of in contrast, uses a lot of smaller crossings, and rail freight represents 13, at least in June, according to the BTS, represent 13% of transporter freight. So it looks like rail has a lot of market share to gain there. So I think it's a pretty big deal that they're looking to increase capacity there at Laredo, and the largest categories of freight that cross there, motor vehicles and parts. So lots of auto parts go south across the border. Lots of finished motor vehicles go north. Lots of minerals, fuels, a lot of refined products go south. So those are kind of the big commodities there. One thing I thought that was really interesting from the rail side of things is Canadian Pacific increased its estimate for EBITDA, for incremental EBITDA associated with market opportunities related to the Kansas City Southern deal. They took that from $600 million to $820 million, sort of after discussing those opportunities with customers. They sort of had the initial estimate sort of before the deal was announced, and seemed to have gotten more bullish after talking with customers. And some of the segments there where it could really be a big deal, they called out bulk and intermodal. And Noy already talked about intermodal this morning. I think the bulk franchise is, could really have a lot of growth there cross-border. Like for grain, Kansas City Southern actually moves more freight southbound than it does northbound because so much U.S. grain goes south across the border, and less goes north. But with connecting Canadian Pacific to Kansas City Southern now in a single line route, it seems to open the door for more Canadian grain to go south. Like the Canadian Pacific has talked about how they're testing grain trains from Manitoba as far south as Mexico, with strong cycle times they've talked about. So that's really why one of the main groups that's pushed back against this deal has been U.S. farmers, that's concerned that they're going to lose market share to Canadian farmers because it's easier to get Canadian grain now all the way to Mexico instead of just having the option of having U.S. grain into Mexico. So that's something that could change even more with this expansion that Noy was talking about.
And one of the other topics I kind of got briefly touched on was that topic of nearshoring. Does this, in your mind, kind of position Mexico as a nearshore destination potentially for those looking to get back into North America? As you mentioned, auto parts, things like that really being very common moving across the border. Does this help that at all?
I think it does. We've been talking about Mexico being the new China for forever, but it seems like there's more push to do that now with all the human rights issues in China. You've seen like Apple trying to partially pull out of China for iPad parts and put them in Vietnam. Like that's sort of, I think representative of what a lot of companies are trying to minimize their exposure there. So I think to the extent possible, most of what's made in Mexico that's moved across border, it tends to be sort of higher, goods that are difficult to move overseas. So it is a lot of motor vehicles, appliances, televisions, things that are kind of big and bulky. But all these things, I think help, solidify Mexico as being a manufacturing destination. You brought up sort of the one thing that's really getting in the way of Mexico having a huge economic boom, and that is all the safety issues. If they could figure those out, have a strong rule of law, make sure it's run by the government and law-abiding citizens instead of gangs, then it would really economically boom, I think.
Now, you'd mentioned the commodities a bit, and you talked about the parts that are moving in and out, and you mentioned the grain. And I was going to ask specifically, I couldn't tell you about, what commodity is moving the most where. But I guess, would that mean that's where we're going to be seeing demand now, is maybe more in the grain and more in those automotive parts and televisions, as you mentioned?
Sort of a wide range of things. I mean, I think energy would be another one where there's a lot of movement. I think with auto plant, I mean, I think the incentive would be to, if you're going to open up a new auto plant, you want to do it, sort of someplace where it has relatively low cost labor. So you'd either be looking at the, right to work states or putting it in Mexico. And so many of the auto parts suppliers are still in sort of that Detroit area, and there's so many different suppliers there that are the tier 2s and tier 3s and tier 4s, that if you can send all those auto parts down across the border to an assembly plant, have the vehicles assembled in Mexico, bring them back across the border to where the consumption centers are. I mean, I think it makes a lot of sense, even with auto plants being more automated. There's also a lot of issues in energy with things like Mexico not having, pipelines that are secure, not having enough storage capacity for, the energy products, not having enough refining capacity. So a lot of, energy is sent back and forth via the railroad rather than pipelines. I mean, it's one of the issues with crime is stealing energy from the pipe, basically cutting into the pipeline and stealing energy there. So it's more secure to send it on the railroad. So that's another area that has potential for growth. Noy talked a lot about the intermodal side of things, which I agreed with all of his comments that LA Long Beach, we know about how bad the congestion is there. Lázaro on the west coast of Mexico provides an alternative there. Canadian Pacific has talked about running test trains from Lázaro, Cardenas on the west coast of Mexico all the way to Chicago, which is a long trip, but they say it's now competitive with LA Long Beach, which is pretty amazing and could be pretty disruptive. They've also talked about domestic intermodal between Chicago and places in Texas, including Laredo, as being an area of growth. So you could see a lot on the intermodal side there too.
And Mike, real quick before I let you go, one of the things that you mentioned I think was really interesting and intriguing was potentially around grain and different farmers really kind of being upset or having some pushback against this. When I think about farmers in the U.S., I think of it as a very protected industry and segment with different types of regulations and subsidies put in place. Do you see this as a potential sticking point for anything, or is this something that's just going to have a little bit more regulation potentially?
It'll be interesting, right? I mean, it's the Surface Transportation Board has the right to, of course, approve the deal, which we expect it's going to be approved. There's likely to be mitigation measures put in place to ensure that the railway network remains competitive, which is always a concern when you have a merger. In this particular, case, the fact that they can move grain from points further to other places. I mean, railway is more competitive, than it used to be. It's since the STB is coming at this from, is a reduction in transportation competition. I think it makes the case that there's more transportation competition. So I don't know that the U.S. farmers have a good case there that we're going to be hurt because there's a greater degree of competition. I mean, we're trying to enhance competition to ultimately bring down prices for consumers. But I agree with you that they get a lot of special breaks that they don't deserve.
Mike, thank you so much for joining us this morning. One last question. Where can people hear more from you and the Stockout?
So just go to www.freightwaves.com/the Stockout. You can sign up for my newsletter. Also going to have a show this afternoon at 1 o'clock Central Time with RJW, which is an asset-heavy 3PL that does a lot in the CPG and retail space.
Awesome, Mike. Well, a pleasure as always. We'll be sure to be tuning in a little bit later on this afternoon, and we'll check you out on the Stockout. Right now, we're going to take a short break, but we'll be right back with more Freightwaves Now.